We take in somewhere between 4.5 and 5 trillion a year in taxes. I don't think we've ever gotten to 5, but just under. And he wants to lower taxes, but let's just give him the benefit of the doubt and say it's 5 trillion. We owe $28 trillion in 3 years by 2028 in bonds that are coming due, right? We take in 15 trillion over the next 3 years in tax revenue, and yet we owe 28, which doesn't take into account anything we do over the next 3 years. We're already over 800 billion in debt for this year, and it's only February. So how do we continue to finance a debt and incentivize people to take our treasuries when we don't even have enough in tax revenue to cover roughly 50% of what we've already committed to that's coming due in 3 years, let alone what we're doing now, and any other funding? It's a problem. And so I think by at least marking it to market and pegging it to treasuries, you would begin to perhaps rekindle some form of demand. And you hear what Elon Musk was saying, put all of the government spending on a blockchain. Well, I have said for 4 years that the only way that anyone will ever drink the Kool-Aid again is to marry a new system between blockchain technology and gold. Now, Judy said to me, I believe they will issue stable coins. Whoever they is, could be Tether, could be USDC, could be Ripple, whoever, third-party entities issuing stable coins off of the 50-year treasury that would be listed on a blockchain with all the gold behind it. You're now beginning to establish transparency and confidence in a system that is bankrupt of all of that. This is a situation where this government is broke, we're insolvent, we're in trouble. I don't care if Doge knocks $1 trillion off the balance sheet. You're still going to be $1 trillion plus, if not more, in deficit spending every year. You're never going to chip away at this growing mountain of debt. In a rising interest rate environment, this becomes an existential threat to the country. So there has to be something shocking and unconventional. If you told me that gold would be revalued to 140,000, most people say you're out of your damn mind. But is it that crazy? I mean, Bitcoin's at 100, at 140,000, the $36 trillion debt in essence is rendered on par with your assets. Your balance sheet looks perfect. Who's been accumulating all the gold? Well, it's the central banks. Who's it going to benefit? All the central banks. Could it happen? Maybe. I know it sounds crazy, but in essence, I think, especially when you look at the rather shocking things that Trump has done so far, all bets, I think, are open. I don't think you can take anything off the table. I think that's somewhat crazy, but to see it revalued at 24,000, 40,000, whatever it is, adding 10 trillion free and clear to the treasury at 40,000, is that not something that they would think of? Why not? I just will simply say, I don't know what the hell's going on, but I will tell you that what is happening is an anomaly, maybe the biggest I've seen in 35 years in this industry. So I think we have to have an open mind about what's going on. And I do know this, it ain't just about Trump tariffs. So to me, nothing else really in this industry even shines a light remotely close in terms of intrigue to what we see happening here. It's what I'm paying attention to more than anything. At the same time, you had the central banks buy almost 1,200 tons of gold in 2024 alone that we know of. Much of the gold that they accumulated was off balance sheet. Like if China buys it, the PBOC has to report it to the IMF. But if the PLA, the People's Liberation Army, buys it, and they probably have more than the PBOC does, they don't report it. And if proxy banks or commercial banks or sovereign wealth funds buy it on behalf, they don't report it. And I've reported over the last couple of months how China has been flying all around the world buying doré and concentrate directly from miners. Doré is a crudely refined bar the miner will refine and then send it in for purification or full refining. It's about 40% refined or something like that. Or concentrate is like a sludge, byproduct of all of this. They're buying it, paying double what the West will, shipping it home to China for refining. So it disintermediates the marketplace. No one knows what they're buying, doesn't affect the price. There's all sorts of clandestine purchasing right now. No one wants to, lift up their skirt and show how much they're holding and accumulating and purchasing. And why would you if you knew gold was going to be revalued at some point? Why would you if you knew it was going to be pegged to a new system? And why would the most powerful bank in the world in 2019 reclassify gold as the only other tier one asset? And why are all the central banks buying it and repatriating it home? And why is it now coming here? And why is it the largest deliveries and the largest deposits? And I mean, keep on going. The United States government's balance sheet, not the United States, but the government's balance sheet is $5 trillion, just over. The largest asset on their balance sheet, student debt of $1.4 trillion, $5 trillion. It's roughly 40%. They're not going to monetize that, nor will they monetize the second largest asset being military bases and guns and airplanes and et cetera. They could monetize land, that's number 3, but why not monetize gold, which is held in the gold revaluation account, which is valued at $42.22 an ounce, which every central bank has purchased, which is now tier 1, which is flowing into the COMEX at a record no one has ever seen before. When the ETFs are controlled by JP Morgan, I mean, you can see whether or not it happens, they are in position to go bang, 100,000 an ounce. Balance sheet's pristine. Let's go. Let's start. And we're going to sell treasuries to the world now, peg it to a blockchain, and they're deliverable in gold. Who wants to own the U.S. Treasury now? And transparency and immutability and all the things that have been lacking, maybe they're about ready to address them. Not saying that's the case, but certainly looks a lot bigger than just Trump tariffs to me. You know, he's been telling me for a long time and telling the public that it's the old aristocrats that have been running the world, and Trump and started with the revision from LIBOR to SOFR and that they are quietly, and then they siphon all the gold back from London under false pretenses, and then they expose this massive rehypothecated market. And there's even more supposition. There's another angle that's saying that the United States government is actually, or the commercial banks who have been wickedly short are actually long now in London. Yeah. And it's the European banks that are short, and he's going to blow it all up. Could it happen? Do you know what would happen to the gold price if that were the case? But not only that, the systemic nature of everything, because these are commercial banks that are incestuously and systemically connected. Yeah. The whole system can go through massive convulsions, to say the least. So I've always found his take on things incredibly interesting. And I think you could add that to the equation and it becomes even more compelling. So somewhere between what he's saying, what I'm saying, and what others are saying, Basel III and Trump tariffs, somewhere in this great circle lies a whole bunch of truth. I don't think it's as simple as just taking advantage of the arbitrage, where, in other words, you have a paper price in London and a delivery price in New York that is massively outsized from what it normally is, and as an outlier. I mean, it could be, there might be some traders that are taking advantage of that. You buy it in London and sell it in New York and collect that spread. I don't know that that's the case. Gold was up 30% last year, and Treasuries are only paying 4.5%. You know, that spread that makes kind of signaling the fiat game is coming to an end. And if you have a dollar that is losing value at the same time, you know, continuously through inflation, why would anyone want to hold dollar-based treasuries when they can hold gold with no counterparty risk? And I think that's where the idea of, well, if that's the case, let's tie gold to the treasury. We'll have it, we'll post it all on a blockchain. We'll issue stable coins off of it. The government can control the on-ramp and the off-ramp. And to Tom's point, we will really fuck with the Bank of England in doing this. In fact, really destroy things if all of that gold, I mean, the amount of gold, if there's 36 million ounces available, but 380 million ounces outstanding in contracts, what happens? Oh, it's 8 weeks delivery because we don't have enough trucks. Really? And that's why I said at the beginning, I don't know how it plays out, but it's interesting to say the least. And I suspect it's going to be much more shocking as you have the biggest money in the world accumulating gold. You have the public rushing into equities at a level no one has ever seen before. And at the same time, the buy-sell transactions between insiders, in other words, insider and institutional stock buying and selling versus the public, is that, I mean, it's massive. For every one purchase, there's 7 or 8 sales by the insiders. And you have Warren Buffett, who's sitting on $334 billion in cash. I mean, it's insane. So these things are, I mean, that the cash that he has is now larger than the market cap of Coca-Cola, T-Mobile. You're talking huge amounts of cash. And it's funny, he's sitting on 286.5 billion of U.S. Treasuries, short term. The Federal Reserve only holds 195. So he's got more treasuries than the Federal Reserve and more cash in terms of market cap than some of the biggest corporations on the planet.
Right.
What does he know? He knows that he doesn't see value in stocks, and that's where all the public is in 7 of them. Yeah. And, so these are very, very frightening times, actually, as far as I'm concerned, in terms of how it all plays out. But don't be surprised to be surprised, over the next few weeks and months. Desperate times call for desperate measures. This is what happens when you spend 30 years suppressing interest rates, and lying about inflation metrics, and it creates huge distortions in asset prices and anomalies in resources and in capital misallocations of these things. And we're beginning to see these things start to come into line, especially in a rising interest rate environment. You mess with Mother Nature, she'll get her pound of flesh in the end. And by holding down interest rates for 30 years, the distortions, in particular in the Treasury market and in asset prices, I think are coming to an end. And then in weaponizing the dollar was kind of the beginning of the end for the Treasury market, for the US dollar. And so you have to do something substantial to reignite that confidence, I guess. And maybe this is where it begins.